Forgive the laundry basket in the background. That's how you know this is an authentic stock trading tutorial video, because I'm not standing in front of my mom's Lamborghini. All right, so in my live this morning on TikTok, somebody asked me if I could look at the stock chart for Afrm and tell them when was the best time to consider buying this stock. Now we have a couple options here. So you can see right now I'm on Thinkorswim. This is through TD Ameritrade or Schwab, which now it's TD is now Schwab. And we're looking at a 20-day chart. You can break it down right here. So this is the time history on the screen here. You hit 1 hour and it'll open up all these options for you. When it is time to make the trade, I like to look at the 1-day 5-minute chart. However, when we're trying to get a big picture of what's happened over the last month or so, I like a 20-day chart. This is the 20-day chart. Now you can see here from looking at the stock, Afrm has already had quite the run. So is it likely that in the next 20 days, the stock will have another move from $20 to $39? It's basically doubled in price. I see a chart like this and I go, well, I've missed this opportunity. It doesn't mean that I've missed all future opportunities, but for now, for me, we are in wait and see mode. Now, if you're looking at this chart for the first time and you're going, whoa, what are all these lines? What's all this stuff on the screen? These are Bollinger Bands. They are the indicator of choice for me. Now, this is going to be in a technical analysis stock trading playlist. I'm going to put this video in both playlists so you can go through each one and learn a little bit more about Bollinger Bands, technical analysis. It's critical to note that technical analysis is not a guarantee. They're just indicators. So, and you'll see it as we walk through this video, you'll see what I'm talking about when we have a what happens on the chart doesn't necessarily reflect what's going to be happening with the stock price. So first of all, Bollinger Bands. Now, if you want these patterns on your screen or you want these charts on your screen and you don't know how to do it, but you have a TD Ameritrade account, this is not the right tutorial. This is if you've already gotten them on your screen. But don't leave yet because we're going to be teaching you a lot of stuff. In the meantime, you can go to Edit Studies on this pull-down tab here. Just hit Edit Studies. It's the quickest way to get to it. Otherwise, you have to scroll through all the, I mean, look at how many there are. Each one of these has all these endless patterns. It's ridiculous. Just go to Edit Studies. These are the ones that I have on my screen. You can search for them here. You can hit Create. You can hit Add Selected, Save, Apply. You would hit Apply and then you'd hit OK. These are the ones that I use. Now, my most favorite are Bollinger Bands and Relative Strength. That would be these right here, Bollinger Bands, and this right here, Relative Strength. The way Relative Strength works is that it tells you if a stock is overbought or oversold. Anytime it crosses the 70 line up here, which you can see right here, the stock is now overbought. It indicates, it doesn't guarantee, that the stock could pull back. On the other side, we have oversold. In other words, it's sold off too heavy and it's indicating that it could have a reversal. It doesn't mean 100%, as you'll see in a moment. On these Bollinger Bands, the red line is resistance, the purple line or the pink line, whatever you want to call it, is support, and this neon blue in the middle is the 20-day moving average. Now, when I look at a chart like this, I see so many opportunities to trade it. Someone might look at this chart and go, well, obviously you would have bought it here and you would have sold it here, but we don't have a crystal ball. And before any of this stuff happens, say, for example, we're down here or we're even right here, we don't know what's happening next. So to look back at this chart and go, well, you would have bought it here and you would have sold it there. Duh. When it's $20.20 and nothing yet has happened, we don't know that this big run is going to happen. So we need to do a couple things. One, we need to have a plan. Two, we need to have a plan to protect ourselves if the stock goes against us, so cutting your loss. For most traders, it's anywhere between 3 and 7%. You have to do what's right for you. Mine is around the 5% range. 10%, you've already lost 10% of your money, so that can be a big blow. Now, because all this has already happened, what we're going to be doing is we're going to be using something called Fibonacci retracements. It's based on the Fibonacci sequence. This mathematician noticed that these numbers were presenting in things like seashells and stuff like that. So Fibonacci retracements is right here. You click on, and the way it works is you connect the most recent low to the most recent high. So what you do is you right click and this tab opens, you hit add drawing and you go to this little percentage sign, the retracements. Now we will drag it to the most recent low, which was here, click, and it will drop. And now you have potential price targets on where this stock could go. We're looking at $31.74 as the next level of support. If it breaks and it goes below, then the next level of support would be $29.45, and if it breaks that, it would be $27.15, and if it breaks that, it would be $24.32, and if it breaks that, it would be a full 100% retracement. It didn't drop it exactly at $20.20, but no big deal, you get the idea. It would be a full 100% retracement from its high to its low. What we want to see is, does it hold support here? So if it does, in theory, and it could, because you can see it was overbought, and then it started to pull back slowly, and the volume is picking up, so there's a lot of pressure, and there could be a lot of selling pressure. We saw a big red candlestick this morning. If it manages, and it doesn't have to get there today, but if it gradually gets to this level, what we want to see is one of two things. Does it hold support and trade sideways, much like it's doing on this previous retracement level of 23.6%? Does it hold, or does it break support and go lower? At which point, this is a wait and see trade. At which point, does it break and hold support here? Or if it breaks that, does it hold support here? You get the idea. So there can be a lot of waiting. On the other hand, it might not get all the way down here, and it might form support here. It looks like it did, right? It sold off big this morning, then it stopped, it went right back up. It's kind of hovering in this area. So again, for this stock, we're going to be in wait and see mode. Could be a couple days, like you see here. You know, it's like 1, 2, 3, 4, 5 days. Could be 2 weeks, could be a month. Nobody knows. One of two options here for us. One is that it holds support here. Two is that it dumps and goes here. Or obviously the third option, I guess, is that it breaks this 100% and goes way higher. But, you know, again, wait and see. What I'm going to do is I'm going to keep an eye on this level right here, $31.74, and I'm going to right click right on that line, and I'm going to hit create alert, and I'm going to say when this stock is at or below $31.69, alert me. And you can see that now an alert has been formed, and it's going to buzz on my phone because I have Thinkorswim on my phone. It's going to buzz on my computer when the stock goes below this price or thereabouts. One other option that you have, by the way, is to set your alert a little bit higher so you can start to pay attention as it's getting close to that level. Another option would be here. So we're going to draw a little price level. This is just a straight line, and we can just drop it right here. And this is another thing for us. This is our own line that we've added to say, let's see what it does here. Maybe it trades in this little range. The closer the Bollinger Bands are to each other, like you can see here, they're squeezing together, indicates that there could be a breakout coming. So if we notice that these bands start squeezing together and consolidating here, the next thing we want to do is look at where the candlesticks are in relation to these Bollinger Bands. Are they above the 20-day moving average like they are here, or are they below the 20-day moving average like they are, say, here, for example? If they are under the 20-day moving average and there's big volume, it could indicate that the stock is selling off and could break this support and push much lower. On the other hand, if the candlesticks are above the 20-day moving average and the Bollinger Bands are narrowing like they are here, it could indicate a breakout to the upside. Now, and then sure enough, we get it. Now, you might be looking at this right here going, well, why don't we just buy it when they're squeezing together? Because you can see it's above, it's below, it's above, it's below, it's above, it's below. There's too much volatility right here. We're waiting for a confirmation. Just getting in here because the bands are narrowing is more of a gamble than I'm comfortable taking. Of course, on the other hand, if it breaks support and pushes lower, you just sell and take your loss. So you have to do what's right for you as a stock trader. For me, I'm going to sit and I'm going to wait. Now, someone else might say, dude, but it was $25 and you're waiting for the breakout at 27 or 25, you're missing out on this run. That's okay. My objective as a stock trader isn't to make all of the money. It's just to make some of it. Now, let's say, for example, we're keeping our eye on this stock. So if this happens here or it happens here, I'm going to be watching this stock every single day, waiting for a breakout to the upside as my cue to then step in and buy. And we get one right here. We get a breakout and we get some big volume. Look at the size of this candlestick, this big green candlestick, lots of buying coming in. Now, let's say I were hypothetically to buy in on the first candlestick, which would be this one right here at around, let's just say around $20, $26. I'm looking at relative strength as my indicator to exit the trade. So let's just say, I don't know what that number was. Let's just say I get in, easy math. Let's just say for the sake of easy math, I get in at $26.50 and I sell at, again, easy math, $30, $26.50, and I'm buying 100 shares. I'm making $350 on this trade. And I'm getting out because the relative strength indicated to me that this stock could reverse. That could is enough reason for me to take my $350 profit and move on. I've made the money, I'm done. Now look what happens. I sell it here at $30 and it breaks out the next day and it pushes higher. At that point, I could make another trade. I mean, again, this is not a guarantee. It's just an indicator. And what's really strong to me is huge volume and the fact that we're above this 20-day moving average. Until we break below, you could also conversely, instead of selling at 30, continue to hold. And you could use this 20-day moving average as your indicator to say, oh, it crossed below, I'm out. When it crosses below here, the next level is here. If it breaks below support, all bets are off and it can crash a lot harder. You can make multiple trades on this stock. You can get in at $26.50 and out at $30. You can get in again at $31 and get out at like $34 when it turns and it goes here, $34. You can get another trade here at $35.10 and exit again when it crosses this 20-day moving average at around $38. So there's a lot of opportunities here to make multiple trades on this stock. But that ship has sailed. Now it looks like it's either going to reverse course and head down to $31, or it's going to trade on this support where it looks like it could be forming a support line. In which case, like I said, we have to wait and see what's going to happen. If it forms support and it looks like this and we get a breakout combined with strong volume, you could, in theory, make a trade and it could go much higher from these levels. On the other hand, it could drop to $31, hold support, the Bollinger Bands could squeeze, and we would then draw a new Fibonacci retracement from that high to this current low and get a new price range of where the stock could potentially go moving forward. So I wanted this video to be around 10 minutes. It's only 13, so we only went over a little bit. If you thought this video was helpful, please hit the bell, hit the subscribe. Thank you for watching. Leave a comment if you are so inclined. And check the playlist because there's a lot of videos on how to set up your charts to look just like this. All right, everybody. Thanks for watching.